Hello and welcome to another video on my YouTube channel. Today I'm going to talk about the Swiss dividend pearls, and I have an exclamation mark and a question mark because yeah, it's a bit double. So why I'm making this video? Well, earlier this week, I think 2 days ago, there was Manuel Boeck that wrote an article in Cash about the Swiss dividend pearls, and he was discussing a lot of stuff in there. It's a really interesting article. I'm putting the link in the description down below so you can go take a look there and click on the link and read the whole article, because I'm not going to mention everything that he wrote in his article, but I definitely urge you to go and read it because it's an interesting reading. But for the rest, I'm going to give the take-home messages from the first part, and that is that the Swiss dividend stocks are generally good stocks, and certainly in turbulent times. And that's something that I know because my wife and I, we invest in CHDVD for our three daughters. So yeah, we also believe that Swiss dividend stocks are really good. And that's because they are defensive stocks. So you have Roche, Nestle, Novartis, Zurich Insurance. Yeah, you have so many good stocks that are in the Swiss stock market that that you need to invest in them. And then, of course, most of the companies that are noted on the Swiss stock market, they have a great balance as well when they distribute dividends. And a proof of that is was the video that I made of the 20 stocks in the SMI. All those stocks distribute a dividend, and they are almost all having a great balance sheet. So it's really worth it to have a look at that video. I believe it was from the 25th of November. So there you can go and take a look at the 20 stocks of the SMI. The expected dividend yield of the SPI index is 3.4%, so that's 0.1% higher than it was in 2023. So that's again great news, and that means for the CHDVD ETF that normally our dividend yield on cost will rise again a bit for the ETF of our daughter. So that's again great news. And another person said, because Mr. Book pointed out that somebody said that the Swiss stock market will probably outperform the global stock market. So that's also really great news, because the last few years the Swiss market is a bit lagging behind. And then of course, something to take home as well is that high dividend yielding stocks are not always worth the risk of investing in them. So everything that I'm going to say today about the high dividend yielding stocks is taking with is to be taken with caution, and it's certainly not financial advice, and certainly not financial advice to go and invest in them. And I will point out at the end of this video what I think about the 4 favorite stocks of Mr. Book, and whether or not it's really worth it to invest in them, yes or no. So in his article, he gave a table with the 30 highest dividend paying yielding stocks. So it's Leontech, Oerlikon, Bellevue Group, Mobile Zone, Biotech, Sembra, APG, Swiss Re, Baloise, Groupe Minatoris, Julius Baer, Zurich Insurance, Vontobel, VP Bank, and so on. You can pause the video now and have a look at the figures, but know that you can also click the link down below and go and check out the numbers in the article of Manuel Boeck itself. The thing that I noticed immediately was when I looked at Kühne+Nagel and Adecco that something wasn't right. So for Mr. Boeck, the dividend growth rate for the past 5 years is given as 19%, and when I calculate it, it's 29%. And I'm going to explain it later when I come to the stock analysis of Kühne+Nagel, and I will explain then why there is a difference here. So there is also going to be a difference for these numbers compared to the numbers that I gave. So, for example, Zurich Insurance 6%. It's not going to be the same growth rate as I gave in my video of the 25th of November of last year. But when I explain it, you will understand why there is a difference there. And it has to do how we calculate the number. And it's not wrong, this number of 19%. It just, for me, I like more how I calculate the number myself. So for me, it's still 29%. And then Adecco, I don't know where it comes from with the 4.70%, because Adecco is more or less 40 Swiss francs right now, and they gave a dividend of 2.50 Swiss francs, and according to my calculations, that's more or less 6.10%. So I don't understand why it's not more up here. So yeah, a bit strange. All the rest of his numbers are correct for dividend yield, but for Adecco it should be up more. So Adecco should be placed more or less in the top 10 instead of way down here in the low regions of the 30 highest paying dividend stocks. And then the best stock from 2023, Leontech, he discussed it a bit in his article. And when you look at it, so they had more or less 12% of a dividend yield when you buy it now, of course, because when you bought it earlier in 2023 in order to receive the high dividend, then yeah, you wouldn't have had such a high yield. And the numbers that they are yielding now, so the earnings that they are presenting right now of the company Leontech, they aren't looking great for 2023. So the dividend yield is certainly going to drop back down, and the prediction is that it's going to go down to 2 Swiss francs and probably even below 2 Swiss francs. So then we are going to talk about more or less 5% dividend yield that you are going to have when you buy Leontech now. So when you want to buy it, make your own calculations, but know for sure that they are going to drop the dividend down when they going to announce it at their annual meeting. So when they make the proposition for their annual meeting, you will know it, and don't be disappointed then. And also another thing is, so Leontech, it lost 31% of its value in 2003, 23. So yeah, you also need to know that they are not going to pay out the same amount as they paid out over 2022 in 2023, and they are not going to earn as much in 2022, so definitely take into account that the dividend will be below 2 Swiss francs. And also Oerlikon, number 2 from the list. They consist out of 2 branches, and one of the branches is the polymers, and that branch is definitely not doing great, and the stock price is also dropping a bit from Oerlikon, and that's also putting up the dividend yield, because yeah, when the stock price goes down 20%, just like here for Leontech, the stock price went down 31%. So then on paper, the dividend yield is going up. But for the people that bought it at the beginning of 2023, it's the yield on cost that matters. And it's the same for Oerlikon. So always remember the numbers that I'm putting out for dividend yield are the dividend yields when you buy it now, compared to the dividend that is being paid out for 2023. I was paid out for 2023, and that dividend was earned in 2022. So now you have to look at the earnings from 2023 in order to more or less know what they are going to be able to pay out in 2024 from their earnings from 2023. And for both Leontech and Oerlikon, it's not looking great. So what are the things that you should look out for when you look at dividend paying stocks? Well, the debt percentage is really important. Also, the growth potential is important. And also the thing that they make. So either the technology or the products that they have. Is it still state of the art, yes or no? Or is it outdated? It's really important that you keep that in the back of your mind. And then as well, the earnings and the cash flow that they are making in 2023. So for most of them, you already have half year results. You can have a look at that and then make your calculations for the second half of 2023. Is it in the same line as in 2022? And you are certain that the stock is going to have similar earnings or better earnings than last year, then you are pretty certain that the dividend is going to be more or less the same as last year, even going up a bit. And as said earlier in the video, it is going to go up from 3.3 to 3.4% on average for the SPI index. And the SPI is the complete Swiss index. So on average, it will be in order. But as said for the previous two, Oerlikon and Leontech, probably not the case. And from that, you need to keep in mind the payout ratio. So Mr. Boeck says it should be lower than 66% for cyclical stocks. As you know, I prefer to see below 60%. When it's higher, they need to be in retail sectors or really sturdy sectors like you have Novartis, which has a payout ratio of 96%. And that's because, of course, they are in the pharma industry and they are pretty certain of the money coming in for years to come. And then they can take the risk of paying out a higher amount of their earnings. But in general, I like to see below 60%. And then Oerlikon, it has a payout ratio of 128%. But then as well, I talked about Swiss Re in the video of 25th of November of last year, where the payout ratio was 393%. And there I explained how it came. It was a really bad year, 2022. The year before it was much better, and then the payout ratio was 70%, 78%, I think. And normally for 2023, the payout ratio is going to drop again for Swiss Re because they had a great first half of the year. The second half of the year, with all the water problems, I don't know how they are going to perform, but the predictions are that the earnings are going to be way higher than from 2022 and more or less the same as from 2021. So then normally the payout ratio would drop again for Swiss Re. And then he mentions a couple of other stocks that have higher payout ratios. So EMS Chemie has 107, Adagio has 123%, Medmix had 178%, and Schweiter had 197%. So that's way too high for me, and nothing that I would consider putting my money into. So another thing that I need to mention is that his list of 30 highest yielding dividend paying out stocks isn't actually correct. When I made my list from all the stocks that are noted on the SIX stock exchange, then you have also Alpine Select, Castle Private, Varia US Properties, One Swiss Bank, Intershop, and Nieback. And they pay out Alpine a staggering 54%, Castle also a staggering 41%, and that was probably exceptionally because they put out really high dividends last year. But Varia US Properties, it's for already a couple of years that they are way up there, and they pay quarterly. It's a real estate company. The only thing that I know there is, although they have a high dividend yield, the stock price is going down constantly, and also the assets under management that they have is going down constantly in America. So I don't like to see that, and that's why I put this in the comments here. Do your own research, and Mr. Book probably left them out for a reason, and I mentioned them because I think it's more honest to give everything. So now you have the top 36 dividend paying stocks from the SIX stock exchange, and yeah, you need to know it. So when you look at it and you see a stock like this, and you think, yeah, why didn't he say something about that? Because 54%, that's enormous. Well, probably because when you do your research, you will find out that Alpine is already going down for several years, and the numbers that they are putting up aren't great at all. And still, they are paying out dividends and putting out extra dividends, and that's why they have a high dividend yield. But in the end, it's just a yield trap, so be careful. And then Mr. Book, he mentions four stocks that are the favorite ones for the coming year, so this year, 2024, and that are Mobile Zone, and that had a 6.6 dividend yield. So when you buy it now and you look at the dividend from 2023, then it's a dividend yield of 6.6%. APG, which had a dividend yield of 6%. Kühne+Nagel with a dividend yield of 4.8%, and then Sulzer, which isn't on the list of the high paying stocks, so not made it on the list of 30, but it's just below it. And Mr. Book said that probably it will be on the list next year because the dividend will go up this year. So the dividend being paid out for 2023 in 2024 will go up. And well, I did my own analysis of the stocks, and you should do yourself your own research as well. So when we look at Mobile Zone, so this is the ticker and this is the ISIN code, and the price is 14.10 Swiss francs currently on the SIX stock exchange. The dividend that it paid out in 2023 was 0.90 Swiss francs. The dividend yield is 6.38% right now, when they are going to pay out the same dividend, of course. The earnings per share was 1.25 Swiss francs over 2022, and as such, the payout ratio for the dividend of being paid out in 2023 was 72%, and the price to earnings ratio is currently 11.3. So that's really good. You know, I like it when it's below 18, this number. So rather below 15, 16, but below 18 for dividend paying stocks which are paying out dividends consistently. That's 18 for me. And so they are paying out 8 years out of 8 years already a dividend. And the last 2 years it went up. It went down in 2021 a bit. So it was 0.56 that they paid out in that year, and the years before it was 0.60. In those 2 years it was also 0.60, but it it dropped a bit because they gave out a few more shares, so it went down to 0.57 corrected. So you also have to be aware of that, of course, when companies issue more shares than the previous dividends go down a bit, of course. But for me, Mobile Zone with a payout ratio of 72 and a PE ratio of 11.3 is actually one of the better stocks that he proposes for 2024. Am I buying it myself? Not really. And a lot of people last year thought the same, because last year the performance of Mobile Zone on the stock market was minus 14.23%. Then we have APG, SGAN. So currently 183 Swiss francs on the SIX stock exchange. It paid out a dividend of 11 Swiss francs in 2023, which means a dividend yield of 6% more or less. The earnings per share were 7.81, and here you immediately see the problem. The payout ratio is 140.8%. Not acceptable for me. The PE ratio also above 18, 23.4, so not acceptable for me as well. And then when you look at the graph, yeah, you are missing 2 years here, 2 years here. So only 15 years out of 19 years dividend is being paid out. And the last 2 years there wasn't anything growing. And when you look at 2019 up to now, actually the dividend dropped from APG. For me, as a dividend investor, I wouldn't consider investing in this stock at all. Kühne+Nagel, I already discussed this one in the video of 25th of November, but a lot changed from that moment on, because now the price is 299.90 Swiss francs, so it went up 47 Swiss francs in a little over a little over a month and a half. So it really performed great, Kühne+Nagel, in the past month and a half. The dividend that it paid out was 14 Swiss francs in 2023, so a dividend yield of 5.54%. The earnings per share is 22.03 Swiss francs. The payout ratio is 63.5% and a PE ratio of 13.6, and it was 11.5, but now 13.6, it's still more than reasonable, and the payout ratio is also really good. So together with Mobile Zone, Kühne+Nagel are two reasonable stocks to propose for 2024, and it's been paying out 16 years out of 16 years, and the last 3 years it's on a rise again. So it went up from 2020 to 2021, from 2021 to 2022, and from 2022 up to 2023. And as you remember from the table, he took the last 5 years, so 14 minus 6 more or less, that makes 8, and 6 to 8 is more or less 120%, divided by 5, more or less, is 19% for him. But I take into account as well the drop here, and then a rise, and then a big rise, and then a big rise. And I take the average of the last 5 years, so not the overall growth in the last 5 years. So for me, it's 29.15%, and for Mr. Boeck, it's just 20, more or less 20%, going up from 2018 to 2023, more or less 20% each year. And then Sulzer, the last company that I'm going to discuss for this video, it has a price of 86 Swiss francs, almost 87 Swiss francs. It paid out 3.50 Swiss francs last year as a dividend, so a dividend yield of a bit higher than 4%. The earnings per share in 2022 were only 0.83 Swiss francs. I put these numbers here, so 4.1 was the earnings per share in 2021, yeah, and 3.07 were the earnings per share, the diluted earnings per share from the first half of 2023. So you see, it's going up, but the payout ratio 421% in 2023, it's way up there. Also, when you look at this, okay, it's going to be, I think they are going to earn 2.7 in the last half, so it's 5.77, 5.8 that they are going to earn over the complete year of 2023. So then it's going to be more or less 66%, and that's why I think he proposes it as a good dividend stock for 2024, because the earnings of 2023 are going to be much higher than from 2022. But the PE ratio, yeah, when you look at that, it's 6. How much is it? 86 divided by 5.8. That's 14.8. Okay. Yeah, I can understand why he proposes it, but Sulzer, I'm not a big fan of the company. So do your own research about this one. And the thing that I like about Sulzer is that they are really careful about raising their dividends. Although last year they put a lot of extra money towards paying the dividend of 3.50 Swiss francs, and I wouldn't have done that. They gave an extra dividend in 2016, which was really high, I didn't calculate this as a drop, because when you look at the evolution, it's going up slowly, and only in 2022 they raised it a bit higher than normally, and that's also what causes it to have an average growth of almost 9% in the last 5 years. But they are really smart about that. So if you understand Sulzer way better than me, and you like the PE ratio for next year, meaning this year, and also the better payout ratio that they are going to have with the better earnings that they are going to have in 2000, that they had in 2023, but we don't know it yet. They are going to give them out in April, I think. So we have to wait a bit to be sure. But yeah, 3 out of 4 reasonable suggestions, and one suggestion that I really can't stand behind, and then one of the 3 seltzer also not my cup of tea. So not financial advice at all. And with that being said, thank you for watching this video, and see you the next time on my YouTube channel. Bye.